Well, on everybody, we're back for the 3 p.m. Eastern Time London close. Not the London, it's New York. I keep saying London. New York stock market close session. And this is Lennox from Simple 123 Trader. Hope everybody's doing well. And again, glad you can join us for this last hour and thereabouts. We're just starting a few minutes early just to see what the market has done since we left off this morning. So I'll review that. I'm going to review it a couple of times so that anyone coming in late will also see what we did this morning. So George, you're with me still?
Yes.
Okay, and you can see my screen okay?
Yes, Ken.
So with me is Mr. George Pitcher from New Jersey. He was here with me this morning, and we jumped into, or if anything, I jumped into the IWM chart at this point here. So I'm just going to go over this little run here. I'm on the 5-minute time frame right now, and I'll go down to the 1 minute where I've just highlighted that area and just go over that. So this morning on the 1 minute chart, we looked at just this move. No, it's not. That's not it. We're over here. Sorry, haven't got there yet. There it is. So we looked at just this move. We had a 1, 2, 3 bottom. Yet another 1, 2, 3. Jumped into the trade. At this point, my risk was this much, basically. This was my risk. Bought the 203 calls, which would be up here somewhere, for $45. And at this point here, they were worth $103. So price moved back down, and then looking for the final push to finish our structure, which would break this high, and then I would take exit at that time. So I really should have taken the exit at this point, but that's fine. Knowing that the structure plays out with the push to the upside, I was expecting that push to the upside at that time. So I thought, okay, I'll wait for that next move. And I was thinking that it would even go higher, of course. And you can see it did not. It just broke it very briefly and then came screeching down. So I did not take the profit at that point. And so right now those puts are essentially, well, they're not worthless, but they're pretty low right now, probably down in the $5 range at this point now for these puts. So it would have been ideal, of course, to take the profit at that time when you have a double of your money. So this is the whole purpose of the trade, is to get in and out as quickly as possible. And if you can get a double of your money, that's the ideal scenario on this time frame. So we're down on the 1 minute time frame. So $45 per contract. And so I bought 3 of those contracts. I just wanted to, the market was very slow. It wasn't doing very much at all. So I didn't want to go in with 10 contracts. I decided to just go in with 3. And so losing that is not a huge thing. It's three contracts, $135, $140 with commissions. It's not that dramatic a loss. So just wanted to show the whole process of getting in a position, taking a position, limiting your risk, and then getting that nice kind of profit even on this time frame. It's just a beautiful thing to behold when you can see that the setups as they form. We saw the move down, and then followed the move back up, following our structure, and it was just perfect. So now it did the same thing going back down. It's actually has done that same structure to the downside, and ended up down here. So that's the move to the downside. So it took a while to do that, and now we are. You can see at this point, I thought maybe we were at the bottom, and it made a valiant to try to break to the upside here, but could not. And then again, tried that, finally finished down here. So I can take this one off here, remove, and it finally came down and finished here and is now heading back to the upside. So let's take a look at what it's done. So there we go. Okay, so it is still trying. So now we have this kind of move, or we can go like this to that level, which gives us the 1, 2, 3, and then we could have a final push here into the close. We'll see if that happens. Today is a huge expiration day for a lot of the options in the market. It's the 18th. It's the third Friday in the month, so this is a big day for expiration of options. So we could see a good push into the close here. So I will watch this closely now to see how it finishes off.
Sorry, I came in late, but does it look like you're not totally screwed out of your option that you made?
Hi there. I just now went over it, and I'll do it again. I said to everyone that I would do it once, and then I'll do it again because for those who come in late. So
you don't have
no
to
problem.
do it again.
Sorry?
You don't have to do it again.
Oh, no,
it's fine.
No, it's all good. It's a good exercise, anyways, for everyone to see what transpired. So right now I am trying to exit with some profit. So I'm still trying, but we'll see. It's going to be a battle, but I'll show you what I've done. All right, so I'm on the 1 minute time frame here. Let me just go to the 5 minute time frame. And so this morning, the market opened right here. So it was very slow motion in here at this point. However, I jumped in and I bought the 203 calls, which are up here. I bought the 203 calls for $45, and when they reached this point here, they were worth $103 by my terminal. So they were at $103, and I did not take the profit, and the price moved back against me here, and then I was waiting for the structure, which is the structure, to complete. So we had the structure like this up to this level, and while it did complete, very small push above the top, I was not looking at the price at that moment in time, unfortunately, and missed the opportunity to get out of the trade. Price came back against me, so I thought, okay, I'd wait and see if price would bounce again and take another stab at it. But you can see what it did. It just kept going down until it reached this bottom. So now it's a battle now to see if it'll break this point and come back up into this area where it might give me a little bit of maybe a profit. We'll see. So that's basically the gist of what transpired this morning. So let me just, I'm going to keep my eye on it now to see if it does in fact. I'm grasping now, definitely.
Turn right now.
Sorry.
We're getting a slight downturn in it right now.
Yeah. So I'm going to have to watch it closely now to see if I can make something out of it before the day is out. All right, so it'll take we're at just 5 minutes after midday, so we'll need a big push in the end here, at least to get, we'll have to get up to at least let's say 201.5 or thereabouts. We have to break this high in order to really make a dent. Okay, so I'm just going to go over this now in a more detail, this area here, just to show you in detail what. So the purpose. So first of all, thanks everybody for joining us. We started a little early. We started 5 minutes before the time, and we were looking at this area in pink here this morning. So I'm going to go back to it again one more time just to show you in a little bit more detail what I was talking about here. So here we are on the 1 minute time frame. Okay, so the entire purpose of us doing this session is to show you how the 1, 2, 3 strategy works on the 1 minute time frame. So or even the 5 minute or the 2 minute or the 3 minute. So it all depends on, you know, I can go to TradingView and I can go to down to the 1 minute chart here or the 3 minute chart here. I can go into Thinkorswim, and on Thinkorswim, I can show you, I can set up the charts for any time frame I really want. So I've got it on the 2 minute here. I've got the IWM on the 2 minute, the diamonds on the 2 minute, the SPY on the 2 minute, and the Qs on the 2 minute. So I can go to the 2 minute charts. I can even go to even less. I can go to tick charts like what George was showing, we showed this morning. So the time frames, you can customize this to your heart's content. And so it's quite powerful platform. I don't like their charts, however, so that's why I don't really use them that much. So yeah, it's pretty powerful. So let me find the top of this. Okay, so I'm back. There it is. Okay. All right. So TradingView is got really nice charts. Okay. So back to investing.com. All right. So the purpose of the session is to show you how the 1, 2, 3 works and how you can enter it and make a profit. So basically, we're looking for this pattern. Our area of entry is this little rectangle that I just drew, and we're looking for price to pull back into around the 50 to 62% area. This is the sweet spot for entry. So if we can get in 50% to 62%, these are fib numbers, and the probability of price moving back into this area is always the highest. So we're just going with probabilities because this is all math. So this is our 1, 2, 3. And we're looking for price to push up to the Elliott wave. When we use Elliott wave, it's 1, 2. This is the 1, 2, and we're looking for price to take us up to the third wave. And that's the move. So this morning, we watched this price finish this move down, and then after it finished the move down, it created a 1, 2, 3 bottom at that point. So looking to enter anywhere in this area. So the area of entry in this case for the larger 1, 2, 3 is this whole thing. It came all the way down almost 100%, you can see, so like 89% or something like that. So after that, you can see that it created, make this a little bigger so everybody can see. After that move here, it created yet another 1, 2, 3. So this was another 1, 2, 3. So now your area of entry becomes smaller. So there will be another 1, 2, 3. So now I'm looking at this red candle and looking for an entry when price breaks that red candle. This is your finer really fine entry at this point. So you can see price came down again into that sweet spot area and then started to move. So as soon as price broke, in essence, at this level, when with this 1, 2, 3, when price breaks the lowest bar, you can take the entry. So this could be an entry at this point here. However, I think I waited for the break of the red. So my risk is that much. This is my risk, or I could use this entire thing as my risk. So in any case, that's the risk. So I bought 3 contracts of the 203s, which are right about here, looking to come back up. I bought 3 contracts for $45. I didn't want to buy too many contracts. Usually I go gung-ho and go buy 10 or more because they were really inexpensive. So 10 would be $450, which would have, you know, my limit is 500 at this point. Especially today, you want to kind of, because the market was so slow, I didn't want to take a big risk. So $45, and then price moved up quite briskly. It was at $103. If I can do this, $103 when price got to here. My mouse is sticking, sorry. So I thought about taking profits, but I realized that the structure was not complete yet. So I was looking for a quick, this big strong move, I was looking for a quick push back up, and then I could take profit at that time. However, it came back down a little lower, and I think they were around 75 cents. I think I was saying $75 at this point here. And so I was waiting for this to come back again to break the top, and then I would take profit. So you can see it did break it just by a tad. But at the time, unfortunately for me, I was I was on the Forex side of things, looking at the other charts, and didn't see that breakage. And so by the time I got back, price was back down. And so I thought, okay, I would wait for this entire move now to be retraced and then jump in and then either buy some more when price started moving again to the upside. So that was my thinking at this point. However, you have to realize that if you're in a 1, 2, 3, if price breaks your number 1 point, which it would be here, then you have to reassess everything. And indeed, price came down, would not turn around at all. It just kept coming down. So now I'm starting to see what's going on as price is unfolding. And subsequently, we are currently where we are. So let's see how it unfolded. So it formed a 1, 2, 3 top here. So now, you know, you could actually reverse and go the opposite way because you've got a 1, 2, 3 top at this point since you've finished. But again, I'm thinking that maybe we still might not break this low, and we can still push back up. But you can see that it's not going to happen. Breaks the low and then continues down. So in the end, let me go back up to the 5 minute. In the end, we finished. This entire move came down into this type of structure here. So it did kind of finish 1, 2, 3, 4, 5, up again 1, 2, 3, 4, 5. That's what it's kind of doing, and finish the structure overall to back down to this level. So quite a ways down, and now it's a battle, of course, to try to break and make it above. So time is against me completely at this point, so not looking too good for that. So yeah, that's it. So the whole purpose of the 1, 2, 3 and what we're trying to do is to get into a position as soon as the market opens and take profits as quickly as possible. So this was the perfect setup for that. Everything was, you had a double of your money and done. And instead, now I'm suffering a loss because I didn't get out of that at this point. So, but that can happen, as you can see. You have to be alert. You have to be paying attention at all times, especially on this time frame. So that's where we sit right now. So it's
the nice part about looking at the the IWM in the morning and the afternoon is that you usually have such good action on it, and it's easy to see the 1, 2, 3 unfold. It's a fantastic learning tool and can also be very profitable.
Yes, indeed. So you can see the 1, 2, 3s very clearly as they, as they unfold. And once everything basically, this is a 1, 2, 3 as well. But once you start the 1, 2, 3, when you get the first initial one, that's where you count your count is. You start your count. So you're not counting the other ones as 1, 2, 3s per se. You're just kind of looking at the structure now as it plays out. So that's creating your structure. So then you know where you are in the structure. So when we see this is finished to this move, it's over. Especially when you see a red bar breaking, green bar coming back down, that move is done, and you have to look for what's going to occur. So the entire series plays out usually the same way all the time. So the expected move now would be to the upside once this reaches this level, of course. But just being aware of what it's doing is the whole key to be able to make profits.
You don't usually hold the options over the weekend, do you?
No, I would let them expire at this point, either with nothing or close if I was in profit.
No, I mean in general, if you hold options over the weekend.
No, I don't. I mean, I do if it's, if I had this till next Friday, yes, of course, right?
Yeah.
If expiry was next Friday, yes. But so this is the again the whole thing, just to seeing the pattern playing out, and then understanding where you are in the pattern. Once that is clear, you can make profits with a lot of confidence and
Lennox, since
limited risk.
this is pretty much complete what you want to, it's not going to go to 203 at this point. You might want to show how you start at the higher time frame and work it down to the 1 minute chart.
Yeah, we can look at IWM or any of the instruments really. So I'm watching. I watch these guys. This one's on the hourly. This is the Dow Jones, and this is on the hourly time frame. The patterns are all similar right now, so that we can kind of watch them all on different time frames. So the Dow on the hourly 1, 2, 3 top, down, and then back down again. So that gave us our structure at this point. Then this area here, this is on the Qs over here. So this is right here. We get a 1, 2, 3 top, and then down to this level. So it looks like at this point we're really not done to the downside. So this move to the upside is going to be short-lived. Looks like we're setting up for a 1, 2, 3 failure here. So
that's on a 5 minute, whereas the top one's on a 15 minute.
Yeah, this is a 15 minute. So we're right here at this point, turning to the downside. So here we are on the 5 minute, like I'm just showing you here. It's a little different on this one in the sense that this is higher than this one. So, and that's starting to fall. So if I go back to the 1 minute on IWM, let me do that, just so that you can see what's going on.
It's interesting that the in the future, NASDAQ is sinking the fastest. It's almost 1% down right now, whereas the SPYs are down about 0.6%.
Yeah, so it's basically over at this point. We're heading back down. We're looking to break this low, and that's what it's looking. So there's no more push to the upside at this point. So that's the bird's eye view, looking at the hourly, looking at the 15, following and understanding where you are in the structure, and then discerning the patterns as they unfold. That helps you to gain much more confidence in playing any instrument, on any time frame. It doesn't matter what the time frame is. This is all doing the same thing. It's just a matter that it's slower on, you know, the higher you go up, right? So let's go to the monthly on IWM, and I'll just remove this guy. Okay, so this is the bird's eye view. We're way up in an airplane. We're looking at the coastline of the IWM, the Russell 2000 chart, and we're looking way back in 2001, 2003, 2002. We get a bird's eye view of the structure, and this is what has played out. So now we know where we are in our structure. So we are in and around this area here. So the next likely move would be back to the upside, and then down again. So maybe not even that high. Let me just do that again. So something like this. So what it's looking like, we get a double head and shoulders pattern might play out up here. Okay, so that is the structure. So that's on the monthly time frame. So on the weekly time frame, you can see from the when we did the structure on the monthly from here, which is right where we are here, we get a 1, 2, 3 that takes us up. So this whole thing becomes a 1, 2, 3 bottom, and it moves us up into a fourth wave area and then finish in the fifth wave. So there's the structure again at this point on that last wave, and now we're in that move to the downside on the A wave. So we're at this point here, pushing back down, and we've got a 1, 2, 3 already, and we're heading to the downside, pushing back up. We should get another move back down. So we could come all the way back down into this area here, 170 or thereabouts, or even, you know, somewhere in this area. So the first line of defense, if we're looking at where the next support would be at this red candle. So I could put it's like that. So that would be where the most likely stop would be. That would kind of finish our structure coming down. Okay, so let's go to the daily, look at this a little closer. Okay, so now we can see it. I'll take all these off. Okay, so we started off with a 1, 2, 3 top down to this level. So that gave us this structure that made 1, 2, 3, 4, 5. That made the top. This is a large 1, 2, 3 at this point. Then another 1, 2, 3 that took us down to this level with a structure 1, 2, 3, 4, 5 structure back to the upside. And again, it's forming a 1, 2, 3 top at this point to come down. Now it's either we're still stuck in this area and because it's a fourth wave and we could still gyrate in here, or we're going to be coming straight down. So one or the other is going to take place in here. We're breaking the lows, but we know that the market just doesn't go straight. So the key thing is to understand that if we get a structure move, we get another move, we're going to retrace more than likely before we move again. So it's always retracing. Right? Every time we get a move, it retraces. We get a big move, it retraces. We get a small move, it retraces. Doesn't matter which way, we always retrace, whether or not we break the level. If we break the level, then you have to reassess your count. So this is done at this point then. This count is done. That's our structure. So that tells us that this structure is complete. And so we're at that level where it's complete, and now we can look for a new structure. So there we get that structure coming down. So again, we're mired right now in this sideways flag. Looks like a diagonal, and usually diagonals will do this kind of thing, go back up and then come down. But in this case, it looks like it doesn't want to go back up too high. It just wants to go down. So dropping to the 4 hour, we can take a closer look at this whole thing. And yeah, so you can see that it's really very weak. We're pushing against this level. Just made that, tried to push back up into this structure that we're in, but it's breaking to the downside. It's breaking out of it to the downside. So lots of weakness in the market. All right, so now we drop down to the hourly and look at this area again. So now we can see it on a bigger scale. And again, we're inside of a kind of a channel. We came to this level, we formed a 1, 2, 3. Now we're moving down. So you can see where we were. We're inside of a little fourth wave area at a support. And it's what we were just trying to pick off some quick money this morning in this area. That's it. So when you're down in a smaller time frame, the moves can be very small, but very profitable. If you're playing on the hourly, this is our 1, 2, 3 that we're looking for. We're looking for a nice clean 1, 2, 3 for that move to the upside. This is what it's about. You can play that 1, 2, 3 to the upside. As long as you understand where you are, you can do this on any of the time frames. So dropping now, so now we understand that we're inside of a type of sideways zigzag pattern, and we're at the tail end of the pattern, breaking through the support of it. We have a good idea of what's going on as we go down to the lower time frame. So I'll go down by the 30-minute. So on the 30-minute, again, the key now is that this is the controlling 1, 2, 3. It's what we're concerned with. So we're looking for the pattern to play out at this level. So we're inside of it. Another 1, 2, 3 is created, and yet another one, and so we would expect this to continue down. Yes, we could get a bounce back up. We could even this structure here might be complete at this point, and we could push back up into here. That's totally possible, but overall we're looking for this to fall because we've got the structure forming. So even if we get a push back up, we wouldn't want to take it going long. We don't want to be going long at this point. We could get a move. Yes, we could get a move back. This is what I was hoping this morning. I was hoping that we get a push back up into the 203 area. That was the play, but you can see it didn't quite have enough oomph to do it. And so even if we do get a move back up, it will be short-lived, and it would be looking for opportunities to sell into this market. Okay, so that's from the 30. So let's look at this on the 15. And there it is on the 15. So this entire thing is one, another 1, 2, 3, and then we're at this level fighting now. I was expecting again that this would come back up and push back up, but it's not going to do that today. You can see the bulls are all fighting. They're trying hard because everybody's trying to get out of their positions on the third Friday of the week. It's the expiration of options, and it's very, very, there's the enormity of options is just amazing. And so on the third Friday, they're all expiring. So people are trying to get out of their positions and so forth. So usually you get a lot more vigor than we did today, but for whatever reason, that's how it was. So that's on the 15 minutes. So if, we can go right down to the 5-minute and look at just this area, and then you can see that's what's playing out. So now that we have a clean 1, 2, 3 at this point, you can see that there's the chances of price moving up now are just slim to none, and we're just going to be heading down. That's it. So yeah, so that's where we are on the chart. So hopefully
Yeah,
that,
next, the 22nd of February's option, 195 are going for 90 cents at this point. 194 going for 72 cents.
yeah, another good day to be buying options
Yeah, right.
for next week. The best thing to do is to wait for Monday to buy the options for next week, for next Friday, because on Monday the market will tell us what it's going to do. You know, it might open up here for whatever reason, and if it does open, which is what we really want, we want to see it move back up, because we're looking for puts. So since we know that we're in an overall trend to the downside and we don't want to be going long, we
Yeah, I
would
think
want.
there might be a holiday next week, President's Day.
Yeah, I think, yeah, Monday's a holiday for you, isn't it? Is it not?
I think so.
Yeah.
It's a holiday here too. It's family day.
Okay, and I know, I'm pretty sure it's a holiday in the States as well, if I'm not mistaken. I'm not sure which one it is.
Yes, the kids are off from school.
So it's not because I heard them say something about a holiday.
Yes,
So-
President's Day.
I'm
I
sorry?
believe it's President's Day.
Oh, it's
I
President.
think.
George, you didn't know it was President's Day down there?
Yeah, it's President's Day on Monday.
My daughter is off from school Monday because
Okay.
of that. Yeah.
So yeah, the market's closed on Monday.
Yep.
So yeah, I guess we won't have won't do our Monday show then, because nothing, well, I guess not the futures, but the Forex.
Do you want to switch it to Tuesday next week, Lennox?
Well, the Forex would be open. Well, but I don't know. I don't know how everybody would feel. We could skip Monday.
We can do Tuesday, Wednesday, and Friday.
Yeah, we could do that. How do you feel about that, George? You okay?
It's fine by me.
Yeah, sure. Let's do that. Well, we should confirm that the market is closed. I did hear something about the market being closed, so let's confirm that before we let me. Let's just confirm that.
Is the stock market open on Monday, the 22nd of February?
President's Day, yep, February 21st, market closed. All right, so that's a confirmation.
Is the stock market?
Yeah, it's closed. So you've got the President's Day, Martin Luther King Day, so and Good Friday next. All right, so let's take so you can see the market, yeah, is heading south as we surmised after it tried valiantly to come back. I think my options were worth about $7 at this point here, so not going to make make anything at all. So just let it expire, worthless. It's fine. Okay, so let's take a look at what is transpiring in the options unusual activity market, and then I'll look at if anyone has any questions. You know, if there are any questions, you want me to look at something, I can do that as well. Not a problem. So just let me know.
I'd like the code to crack the stock market, please.
Well, you've got it. It's the 123. It's just a matter of, you know.
I'd like it foolproof.
Yes. Well, even our EA, you know, playing the 123, it's a tough grind. Made some profits in what was I in this morning? YM, I think it was the S&P 500 I was in. So it did some nice profits in that this morning, but that's just the EA doing its thing. So it worked out nicely. We had it did some sells on the S&P 500. So it did it correctly and went down. Let's see how the US dollar fared at the end here.
It was going up. I think it turned down slightly.
So it did push. From this morning, we were sitting in this flat area. So 6 hours ago, 1, 2, 3, 4, 5, 6. So we were right here, and it pushed right out. So very nice. So we surmised that's what would occur, and that the euro US dollar, which does the opposite, should do the opposite, and that's what it did. So perfect. So opportunity there. It's tough though. There's the 1, 2, 3 at that point, but it's tough to play because when you're in a sideways pattern. Let me make that bigger. When you're sideways, it's tough to catch the right 1, 2, 3. So you'll be thinking you got a 1, 2, 3, and so you have to be super patient. And here finally did do the right 1, 2, 3. We get a death cross at that point, and so that would have been an opportunity to get in anywhere in here and take that to the downside. Whenever you're in a sideways pattern, it's very difficult though to discern where you are overall. Well, you know where you are, but it's just hard to figure out how to get out of where you are. But you can see that's nice and clean 1, 2, 3 at this point with the death cross, with the moving averages. That's just a perfect setup for an opportunity to sell. Okay. All right, so let's take a look at the unusual options. So I was looking at Roku yesterday to see what the option puts and calls were looking like, and there were lots of puts on Roku, and I felt that the puts would have been the best play, but they were quite expensive. So I thought, I've got so many things on the go, I would just leave that one alone. But that one worked out quite nicely. That one I should have just even thrown one contract in, would have made paid dividends there. So let's see. We look at options, and so you've got unusual options activity. You also have unusual options volume, and this one gives you. So this is kind of, I use this as a gauge to finding opportunities in individual stocks. You can also look at ETFs or indices, whichever one you want to look at. So this is just a great way to find opportunities. So I would look at the put volume as in the order, so I see which one has the highest volume and go that way. So for example, CHTR has huge volume on this option. It doesn't tell you what the option is. It just says it's got huge volume, is very large. You can see that the call and the put volume are almost identical. So it's a battle between the bulls and the bears at this point. So let's take a look at that chart, CHTR, and this is how we determine whether or not it's a good play or not. So I go to the monthly and look at the chart. So you can see that we have been way up there, and we're coming back down, and we're right at the neckline of this move of this head and shoulders that is formed. So it looks like we have quite a ways to come down. So I wouldn't be looking to buy any calls based on that pattern right there on the monthly. So on the weekly, we're on our way down. So now we just need to find our controlling 1, 2, 3, and that would help us as we're moving down. So from the monthly, it doesn't look like you would want to buy any calls, but you can see we're right at a support, the neckline support area. So we could get a bounce. So that is totally possible that you get a bounce in from this move. So when you look at it from the monthly, it doesn't look so great, but as you come down in time frame, there are opportunities to go counter. Yes, we're in an overall downtrend, but this can, you can play to the upside as well. So you're trying to find, okay, where's your start? There's your first 1, 2, 3. It created a larger 1, 2, 3. So that becomes our large 1, 2, 3. And then from there, it takes us to down to where we are. So another 1, 2, 3, yet another, and so on. And it's just making them coming down. And that's how you kind of follow it along, it's coming down that way. So if you were playing on smaller time frame, you would just be looking for these movements back up to jump in, movements back up to jump in, movements back up to jump in. You don't really, you can of course play movements from down to go up, but that's counter. But as long as you're aware of where you are, it's okay to do that. You don't have to fear going counter if you know where you are. But the overall, we're in a downtrend, so you want to kind of look to that more so than anything else. So we're back up again to high, so we would want to look for a move back to the downside, more so than a move to the upside. So then if that's the case, we'll still be looking for a put play more than anything else. So you can see again, start of a 1, 2, 3 up here. Yet another drops us down, back up. So opportunity here to look for 1, 2, 3 to set up. You got to get one nice and clean that you can get that move. So I'd be looking for puts rather than calls still at this level on the 4-hour. And then on the 1 hour, now we can start getting the nitty-gritties of getting in. So 1, 2, 3, 4, 5, and you can see we're just totally sideways here. So did we really finish this entire move, or is there another leg to go back up? You can see it's making a 1, 2, 3. Yes, it could move back up one more time because this could be like this move, and then we have one more push. That's totally possible. So you have to be super careful. Anytime you're in this kind of thing, you have to be really careful. So this will be put play, or we could go either way at this point. Right? We could go that way, or we could go this way. So it's either you be patient and wait, or you can take a stab and say, okay, I really feel that it's super weak and it's not going to go back up, and I'm going to buy the puts. So I'd buy the puts like for 590s or something like that. Of course, these puts are going to be very expensive because this stock is very expensive. So just be aware of that.
You're looking at $15.70.
For the 590 puts?
Yeah, the big volume on the put side is on the 600s. It's over 8,000 shares, and that's
right at the money.
$20.15.
So for $2,000, you can buy a put right now right at the money. So that means price and the strike price of the option are the same practically, and so it's gonna cost you to play. If you want to play that, they're gonna charge you $2,000 for one contract. That's pretty big. So if you felt really super confident, you could buy that. You could buy the 590s. I guess they're probably in tens, right? 590 would be next.
Yeah, they're $10.
Yeah, and then 580. So, and even 580. If this is 2,000, the 580s are going to be what, 1,200 or so.
That's $11.75 for 580.
Yeah.
But
So 1,100. So that's how they price the options. But when the stock is very expensive, like a Tesla and so forth, when they're very expensive, that's what you get. You get very expensive option. So you don't want to be playing an option for $2,000 unless you're pretty sure you're going to be. You got to be deadly right in the direction here, right? Of course, if you're playing that kind of option, say you did buy this for $2,000. The beauty of the option, if you have time, if you bought the put and then price started breaking above this level and started going up, you can exit your put right here. I mean, so this is your stop. So you just say, okay, if price comes above here, I'm getting out of my puts, and your price might be 1,950 or something. You know,
If it goes up $20, you're making $1,000 profit.
so you can exit your position, you know, pretty quickly without much of a loss if you have time. If you don't have, you know, if it's today, of course, you know, you wouldn't be able to do this. But
Yeah, I'm looking out at next quarter.
yes, so yeah, so that's kind of the way I look at the chart, and you know, and this is really helpful because I don't have to look through a lot of them. I just look at, you know, look at the ones that seem interesting, and price wise as well. You can eliminate them by price. If they're below $10, you know, you don't want to look at those. Anything above $10 is reasonable. I mean, these all have options in them, but if it's below 10, I don't bother. Although there's still, some of them are playable. But if, you know, if it's above $50, from say 20, especially above 20 to 50, that's a really good price point because the options are very inexpensive. So those are good to look at. And you want to see ones where the volume is rather high. And so looking at, let's see, let's look at one more. Let's look at this one called AMR. The open interest is 0 and it has a huge volume. So that's quite interesting. AMR, Alpha Metallurgical Resources, trading at $89. Never heard of them. Let's see what they look like. So again, just the same process. Go to the monthly, take a look at what the chart has done, and right away you can see that it has done our structure. You know, this is relatively new since 2016 area, but they had quite a move up and then dropped like a rock and then took off again. So we're right up at the top of this move, and we have huge volume, like it said on this AMR. But
And
it's
the
not telling
problem
us.
is, though, that most of the strike prices for on the next quarter, on the next month's activity is fairly
Yes.
low.
Is it low? So there's
Yeah.
7,000 calls. There are not very many puts.
Yeah, but let me see, that might be a different strike price.
So if you look at, say, the 90 calls,
The problem is that the next, it's a March, you have to go to March 18th
18,
options.
I see.
There's
So,
no weekly options on this one.
okay, what are the 90 calls worth for March
90
18th?
calls are going for $8.55.
Yeah, so that's pretty expensive. You know, we're almost right at the money at this point. So that's why they would be very expensive. So there's lots of call volume.
I don't
And
know where that call volume is coming from because I don't see any high open interest.
so it could be from another month then.
I see 445 open interest on 60 calls.
Yeah, so that's just telling us that it's not for next month. It could be for some other, it could be something else. Maybe somebody's has written calls, you know, instead. So you can see here on the daily, looking at that last wave, the structure has played out beautiful. So it looks like somebody's bought a lot of puts. So they're selling calls, as it were. So maybe that's why the volume is so high, because we're completely at the top of this move. And as you can see from the structure, so identifying again the structure is so important. So there's the weekly. So we just looked at from here to the top. So that's our 5th wave. As you can see the waves, you know, playing out. So looking at the 1, 2, 3 here, and then dropping to the daily, you can see how it played out so nicely. You could really see the patterns clearly. So even if you miss getting in here, you know, another little 1, 2, 3, another opportunity still inside the whole area of entries. It's just perfect. You know, you stop right there and you can make that play. So the higher time frames are great for playing as well. You know, so George and I both have options that are out. I've got options out till April right now. I've got an option in a couple of things. So, you know, we can play this on for long term. You don't have to just play this on, you know, at the open or the close or whatever, right? You can do this on the longer time frame. So a play like this, for example, you can use a 2-month contract, and you know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 20, 21, 22 days. You know, you've reached target area. So that's totally doable. So you're getting in, you know, mid December here, for instance, and you're out mid January area. So within a month. So by buying a 2-month contract, you give yourself a little bit of insurance. It might cost you a little bit more. Say, you know, say you bought this contract for $500 total for that play. That's huge money if you're correct in this move, right? Because from 48 to 40, from say we got in around the 48, say $50 to $70, you know, that type of thing. That's 20 points. That's $2,000. So your $500 would be well over $2,000. So it's well worthwhile plays. Yeah, so just follow this down. So that's the daily, now the 4-hour, and just kind of see if we're down at the top. So you can see on the 4-hour as we come up, how again it does the same thing. We get a 1, 2, 3 here to finish off the final push in this move. So it's just a matter of seeing the pattern again. And then on the hourly, you know, we're trying to find now the top of this move, because we're getting there. You can see that.
Okay, you got 8 minutes to close if you had anything in mind you want to do.
Okay. So yeah, so that's kind of the way we look at it. And you know, you can keep going down, but you can see right now we're right at the very top of this move, and maybe we have another little push, one or something like that, and then it's all over for that guy. Okay.
Question to ask everybody, is there any interest in longer term options, longer term being 1 month, 2 months out? If you are, let us know.
Okay, I'm switching over to insider trading activity, because it's the other thing that we look at to find opportunities. So we have the earnings plays, the insider trading, and the unusual options activity really helps. So this is really excellent to see who's buying and selling shares.
Bradstreet, my gosh.
So
Somebody's selling a lot and somebody's buying a lot.
So this person sold 36 million shares at $19.86 per share for $722 million, and they still have 18 million shares left.
Yeah, and the person that bought them just increased his holdings to 88.
88 million, yeah. So, yeah. So, you know, you look at these kind of things, of course, you shake your head because it's just crazy numbers. And you get a good idea of what's going on. And you hear somebody selling MasterCard for $174 million, and they still own 104 million. All they did was sell 465,000 shares, and they still have 104 million shares, and they sold it for 174 million. So yeah, there's some big money going on in this game. Amazing. So usually you would think
MasterCard.
that these are institutions, but it's saying an American shareholder, so it's not really, it's
Shareholder, that's not an institution.
not an institution. So that's yeah, it's incredible. So I heard that Biden came, or not Biden, but the Feds came down with some rule for insider trading from the Feds themselves. The insider guys in the Feds, they can't trade. It just came out this morning that they cannot trade anything unless it's the indices in their portfolios from now on, because there's lots of insider trading going on where they know what's going on before and they're telling other people and so on and so on, and lots of, so they're trying to cut down on that. So yeah, this is
Cut down on that.
this is a super powerful site. This to get this information, it's just incredibly amazing. So what I do is, I just either go by the shares and put them in order of shares bought or sold, and then look for something that's kind of pops out. And you can see there's so many things going on. So I look for CEOs as well. When a CEO is, here's a guy selling 3 million of his shares. So something is up at $2.55. So either he's retiring, or something's going on if somebody's selling that amount of shares. After his shares, after he sold them, he has no shares left. So somebody's bailing ship there, right? Yeah, so these are quite interesting just to look at that. Never mind, going deeper into the analysis. I had looked at this one, D-Dog. It was quite a big transaction, and that was interesting. So yeah, so that we look at that, we look at the earnings, and we look at the options, and that really helps. But again, we stick primarily to the indices to show you guys, because the indices really move quickly, so you get to really see
2 minutes.
the formations. You get to see the formations quite readily. So that's it for the markets today and this week. So it's been a good one. It's been a good week overall. You of course you're going to have losses. It's not, you can't get around that. But the key thing is to make sure we mitigate the loss. Keep the losses small, and when we win, we go for the bigger wins. So that's the secret to the success. We'll see how it opens up on Tuesday morning. Should be interesting. Kind of news that's coming out right now with Russia and so forth and Ukraine. Something could spark over the weekend here, and we could see some serious volatility as we come into Tuesday morning open. Right now, it's looking very, very weak, and we could see ourselves opening up down below here, no problem. So if that's the case on Tuesday, we'll see when it opens. We'll be right down, at the low here, and we'll just right now it's formed this move. So the expected, we could open up anywhere, but depending on any kind of news, we'll see what our intention is to go short. So we'll be looking for opportunities to go short. Conversely, we have the VXX. Let me just quickly look at the VXX. The VXX is the VIX short-term futures, and they point the opposite way to the stock market. So what I've got here on the hourly is a large 1, 2, 3 bottom, and yet another one forming. So
There's the bell.
yes, so looking for this kind of move, something like that. So you can see that the expected move for Tuesday will be a down move in the stock market, because we'll get an up move here to finish our structure here, and then we'll get another opposite move. So this is kind of how the stock market looks to go, and this is how this guy looks to go, the opposite way. So if that holds, we have opportunities to make some points on Tuesday. All right, so thanks everybody for hanging with us. If you don't have any questions, if there are any questions or anything, we'll call it a week and a day and a week.
Have a good weekend, everyone.
Thanks, George and Lennox.
Yes, sir. You're welcome. Again, hoping everybody got something out of this. It's not an easy game, as you can see, but opportunities do abound. So, all right. So take care, everyone. Have a great weekend.
Thank you, Lennox and
You're
George.
welcome. You're welcome, Khalid. We will see you guys next week. Have a great weekend.
You too.
Thank you.